So Josh, please take it away. Feel free to share your slides. If you need to take yours down, Hannah, that's great. But thanks for being here, Josh.
Cool. Yeah, guys. I think you guys can see my screen. Super stoked to be here. Super stoked to be with you. I like I said, I'm Josh Hinkle. I come from a company called Forecaster, which if you've been around Utah, you've probably heard of us because you've probably heard of Jeff Erickson, and he talks about it a lot. But basically, we are a financial modeling platform. We're a software that makes it much easier to build out your financial model, and much easier to share it with investors and things like that. So that's where I'm coming from. I specifically work in the CFO services area of the business. So we, as a CFO services team, basically spun up to address all of the additional financial needs that customers have as they're putting together their business. So, they come to us, they're working on their financial model. And maybe they're looking for pitch deck stuff, fundraising strategy, things like that. And we lean in all sorts of projects to help them out and kind of be their fractional finance team. So that's where I'm coming from. The topic of the day is the financial slides in the pitch deck. And kind of knowing your numbers when talking to investors. So I'll jump in there. And like they said, if you have questions, keep them in mind. I'd love to talk to those points after, because I know we don't have a ton of time here, just in the presentation. But so first of all, couple things I want to highlight is like where we're pulling this financial information from, right? So we work with customers, companies who are anywhere from like pre-revenue, kind of in that idea stage, all the way up to kind of Series B is generally our sweet spot. Once you start getting bigger than that, you start to have your own in-house finance team, so they don't outsource as much there. But anywhere along this journey, basically we're pulling in financial information from what we have, right? And that's going to be comprised from really two sources. Either we're going to have some historical data measuring what's already happened, or we're going to have basically goals that we have set for ourselves and our team. And this is really where the founder's vision for what this company wants to look like. The financial data is a translation of those goals, right? So long story short, we have two things going on here. If you have any historical data, if you're at that point, then your historicals are going to come from your accounting or other data tracking systems. And then your goals, your future, your vision is going to be tracked in your forecast. And so that's kind of why they brought me in to talk about this part, because that's what we do is in the financial model. So to speak to that just a little bit, when you're looking ahead and you're trying to quantify your vision and starting to speak in financial terms about your goals, that's where the financial model comes into play. So kind of the general process I see people going through is, they're starting their company, they have this idea, they build out their pitch, and then they realize that they need to kind of put some numbers here. And so then they start building out a financial model, right? The financial model is going to make you answer some tough questions about your business, right? It's going to go like you're going to need to identify kind of your business mechanics, like how you're making money, where your customers are going to come from, how many customers that you expect to get. It's going to force you to nail down like some numbers to your goals, but it doesn't have to be like overly precise, right? And kind of like the further along in the process you get as a company, as a Series B company is expected to have very precise forecasts. A pre-revenue company is probably expected that their forecast won't be as precise, so there's not as much pressure there. But long story short, your financial model ends up housing all of your goals and intentions for where you're going. So when we look at pulling in the financials information to our pitch deck slides, we're pulling some of it from the historicals and the accounting and some from the financial forecast. Next thing I want to talk about is what financial information to pull in. right? So when you're looking at pitching your business, right, there's kind of a million different spots where financial information might get pulled into this discussion. And a lot of times when we work with clients, they'll show us their initial pitch deck, and there's all kinds of information strewn through it. One of the things that is really important is to identify what is the most important financial information and make sure that we're directing people's attention there in our main pitch deck. So for instance, out of this list of different topics, we've got a projected income statement, we've got our customer acquisition strategies and targets, we've got unit economics, all these suggestions. I would say only a few of these should make it into your main deck. And let me go here. So in the main deck, I just want a few of these, and I would center around the business model, like how the business works, your revenue projections for the next 3 to 5 years, traction and next steps, and the ask/use of funds slide, right? These are core to your pitch, right? And I'll get into that in just a second, but I'd consider these kind of core to the story that you're telling investors, and trying to get them to invest in your business. These other things are really good data points, but I would keep them in the appendix of your pitch deck. And one of the best ways I like to frame this basically is like, you just don't have a lot of time with investors in that pitch. So if it's going to be a slide that makes it into your deck, your main deck, your main presentation, it's got to really count. And one of the best ways that you can kind of generate some trust with investors is starting higher level and then letting them ask questions and then giving them the details, right? So you're going to notice, like in these slides that I want in your main deck, your business model, this is how you make money. Your revenue projection, these are the goals that you have. The traction, what's happened so far, next steps, what's happening next. The ask/use of funds, what are you asking them for? What are you going to spend it on, right? These are pretty integral to the main discussion here. And then as people ask questions about your revenue projection, for instance, maybe they're like, okay, interesting revenue projection. How many customers is that going to take? You're like, oh, I'm glad you asked. Let's flip to this slide in my appendix where I have some details on my customer acquisition strategies and targets and things like that, right? This is a really good look. It's going to keep you really concise in your main presentation, and it's going to make you look very, very prepared as people hit you with questions, right? So I want to go into just very quick double tap into some of these slides and kind of some examples. So first of all, like when you're talking about your business model in your pitch, one of the most important things that you need to convey to investors is like how you make money, right? Like if you're talking to me as an investor, I want to hear your great idea. I want to hear your vision. I want to hear about the problem and the solution that you have. And then I also want you to just be really clear on how this is making money, right? I don't need a ton of details here on these slides, but basically it's think mechanics, right? I should be able to read your pitch deck, just your main deck, and walk away understanding how your business works mechanically, right? Are you a subscription-based product? Are you running services? Do you have like a marketplace? Like what is happening there? I want to be really clear. An exercise I often recommend to founders who are just shaping their deck is to run through and answer these questions, right? Being able to answer these questions very simply helps you identify the mechanics of how your business makes money. So, my business makes money when some number of, tell me who your customer is, who's your target customer, purchase some amount of goods or services. Like, are they coming in? Are they like one-time purchases? Do they buy month after month? Things like that. Are they buying like packages? Like what's happening? For some price, this is one thing I would double tap on. It's best to speak in averages in this case, right? So stick kind of like, okay, like on average, like my customer is this person. They come in, they buy this thing or this service. it's roughly this price, right? And show people that you understand your customer behavior, right? At some interval of time, is this a one-time purchase? Is this a repeating purchase, recurring purchase? Things like that, right? So kind of going through clearly outlining how your business makes money, I think will give you a lot of clarity in one, if you're if you are building out your financial model, and two, if you're talking to investors, trying to transfer that information to them of like, okay, this is what I'm working on. Next on the revenue projection slide. In your main deck, I'd recommend you just show a graph here of a 3 to 5 year revenue projection, right? So this is top line revenue. In the main deck, I don't want you to go in deeper detail. Like I don't need to see the full projected income statement, right? I don't need to see the cost of goods sold and the gross margin and all that jazz. And the reason for this is centered around your goals, right? And the main thing that I want to transfer to the investors in this situation is to convey to them like, hey, this is the problem, the solution I'm solving. I have goals for where I'm taking this company, and I want you to understand what I'm doing, right? This is going to resonate with certain types of investors, and other types of investors it's not, right? So partly this lets the investors know, oh, hey, this is someone who like fits into my investment profile, right? Maybe in this example, like they're like, okay, like this growth to just over 4 million in year 3 looks like the size of company they invest in, right? They're like, okay, that's great. Maybe a larger VC firm that's a little later stage sees this and is like, this is clearly outside of my thesis, things like that, right? So we want to be clear on what our goals are. This should kind of sanity check in other spots of your in your pitch, right? If you have like a market assessment slide, you want to make sure that this like kind of lines up with what you've identified as either your service animal market or your beachhead market or things like that, right? Does this look like an attractive portion of that, and an attainable portion of that? The biggest thing I'd say here is just that, like, are these goals attractive and reasonable? That's kind of what we're looking for, right? Usually when I present this, I will honestly just have a slide with a graph, right? And then I'll let that support what I talk about with investors. And then kind of optionally, I might have a little blurb here just with some high level data points, but probably not a ton, right? Again, it's a great situation to be in when investors can ask you questions and then you're like, oh, I'm prepared with those answers. But you're kind of giving them just what they need at the time. So those are the two I kind of wanted to highlight. I think the other two slides that are necessary, traction and next steps. These may or may not have numbers to them that are going to show up in your financial model. They often will, but I would say like this is another place where your financial model is going to be meeting your deck. If your goal is to have 100 users by the end of month 3, we want to see that in your model, right? If your goal is like, hey, we're not going to have revenue for the next 18 months, but we're going to be spending a whole bunch of money on R&D, we should see that in your model, right? The ask and use of funds, again, that's kind of what I'd recommend is like the very last slide of your main deck. And I want this to kind of bring it all together where you're saying, okay, I'm asking for $1.2 million. I'm going to use that money to reach these milestones. I'm going to spend it in this way, right? And that's kind of very simple slide, not a ton there, but kind of the theme here you're probably noticing is like these slides are simple, but in order to be prepared to answer all the questions that might arise from them, there's a lot of work that goes into it. And that detail is going to be made manifest in the slides that we'll kind of put in the appendix or in the financial model itself when your investors go to walk through that with you, right? Lastly, I just want to talk about some points on how we want to talk about these numbers, right? So when when we're coaching founders through having investor conversations like this, I find that founders are incredibly nuanced people, right? Generally, founders are people who have been in the weeds of the problem they're trying to solve. They have personal experience with it. They know so much about what they're working on that they sometimes forget that no one else knows as much about that thing as they do. And so I find it helpful to kind of reel them in and say, okay, like what is the big picture story that we're trying to tell here? And in like 90% of cases, every time you're talking to an investor, every company that talks to investors is telling the same story, right? And that story is basically like, hey, this is what I'm working on. This is how it makes money. These are the targets I'm trying to hit. I need some money to go hit these goals. And this is how I'll spend it, right? That's pretty much the story that we're trying to tell. And then the investor on their side is going to decide if this seems like a good investment, right? So obviously there's a lot of detail that can go into this, but one thing I'd encourage you to do is like, you want to be able to talk about your pitch in this simple of an outline, right? And if you can keep this extremely simple, and then when people hit you with questions, you can go deeper, that's going to put you in a little bit more of a seat of control, a little more seat of confidence and trust with your investors, while also not distracting them from the main points, right? You're going to see that, depending on what stage you are, investors are going to be interested in different things, right? Early stage companies, if you're talking to investors who actively invest in early stage companies, that like you don't have any customers. If you're talking to someone about your projected customer acquisition cost, that's usually a little bit later stage conversation, right? So very, very early, they're looking at ideas, right? And we don't want these random numbers to get in the way of the things that these investors actually care about, right? So being able to identify, okay, this is my main story, and then flex what we talk about to the needs of our specific investors, is a real skill and a real process of kind of refining that pitch. But long story short, I think like sticking to this helps a ton. And like I said, the best kind of wrap up place for this, like if you have a really well put together final slide that has your ask, your use of funds, and your next step milestones, I can look at that slide and I'm just like, okay, like I kind of know what's happening here, right? You want to make sure that these are all things that you just can't let investors leave the meeting with you without clearly understanding these things. And I think these are some of the biggest mistakes I see founders make. There's always like these very well designed pitch decks and things like that. And I'm like, oh, that's a great pitch. And it's not clear what you're working on, which is a disaster, right? And so my biggest piece of feedback to you as you're putting together these slides and as you're talking about them is like, keeping in mind the function of these slides is more important than anything. And we want to make sure that the information is actually being transferred to investors. It's not getting lost in kind of the whole story. The other piece of advice I'd say is when you're talking about your financial slides, I mentioned you want to speak in averages. You want to let your numbers kind of represent the average customer behavior, right? Show the investors that you understand your customer and how they behave. You want to look at relationships between years, right? So like if I'm jumping back to these projections, right? One thing that's going to give you a lot of confidence in these projections is like some roughly normal relationships between these years, right? If you're projecting like 1 year with like 10x growth, that's a little wild. Like I need you to explain that, right? If you're projecting often like a kind of a normal VC pattern is to triple in the first couple of years and double thereafter to finish out the 5. Lately, the market's been a little more conservative, so there's a strong pattern of like if you're doubling your revenue year over year, that's very much a VC ready company. And it's a benchmark that people are looking for. But just know if you're throwing out projections that are much more aggressive than that, if I'm an investor listening to that pitch, I'm going to have questions that I hope you have answers for, right? So I think that's a big thing that I would encourage you to keep in mind, is like understand the total market and know that you're falling within that when you talk about these numbers. But I think I'm bumping up on time and I need to leave time for Q&A. Am I right in thinking that?
Yes, thanks, Josh. This is awesome. Like what you presented is really great in terms of being succinct and to the point. There are a few questions in the chat. The first one that came in from Eric Gosink was around how to show financials for companies that may not be generating revenue now or for several years to come, like in the healthcare space. Do you have suggestions on that? And Eric, if you want to unmute yourself and share any detail to that question, you're welcome to.
Yeah, and I see your comment kind of highlights the second point. A lot of the technologies that I look at, a lot of healthcare technologies, there may be not even comparable revenues if it's a new product that is going to totally blow open the field. And so, one is just say, oh, well, we could be like the current comps down the road, but what if it's going to change the business and it's going to be years from now? So people have got to throw money at you and walk away and cross their fingers and, hope that something comes in the future. How do you deal with that?
So there's two broad ways of financial modeling and financials for the future. One, you can kind of go top down and look at comparable companies, look at market size, things like that. In your case, and in most cases, I would recommend building from what I'd say is like bottoms up, right? And starting with, okay, like, again, going back to business mechanics, right? You've got this medical tech, you're like, okay, are you selling it to hospitals, right? Understand, okay, who's the customer? Like, is the customer hospital administration? Like, are they making these buying decisions, right? Do we have a goal of, maybe we're like, hey, if we could sell 2 contracts a quarter, that'd be awesome, right? Starting in 2027, that would be awesome. And then we're like, okay, like what does an average contract look like? Are they paying us annually? Are they paying us monthly? That could be an option. Maybe we're selling units and we're saying like, okay, we are developing this technology. This is how much we think it's going to cost. Maybe we need to mark that up a little bit to get some profit margin on it for us. And then we're going to say, okay, this is the cost of an average unit. This is going to be the price of an average unit. And then we're going to set some goals around how many units we're going to sell. So I would, especially in this case where it's so far out, stay bottoms up and also know that like investors you talk to understand that these things will probably change and evolve as you go on, but you want to have something, right? Just represent your current understanding of how this works in the financial model and you'll be good to go.
Josh, on that note, have you ever seen other ways of representing kind of the financial metrics pre-revenue? So if Eric's putting a device on the market in 3 years and won't generate revenue until then, are there other financial metrics that you would put in a slide like efficiency of spend or other things like that you've seen well presented in a deck?
Yeah, really good question. Even if revenue is, 3 years out, I would still probably include a revenue projection in the deck. And let the investors know like, hey, like we have a plan, we have some goals out there. However, it's going to be much less of like a salient point in your conversation, because a lot of what they're going to be looking at is your use of funds, right? And so that's where I would shift more of the conversation, and I'd probably go more in depth in preparing those side of the financial statements. Really answering the question of like, hey, if we get your money, this is how I'm going to spend it, right? And so then I'm going to spend a lot of time on detailed cost budgets and things like that, and other non-financial milestones, right? So maybe we're like, hey, we have this R&D budget, and like by the end of 2027, we hope to have developed our first prototype, and like these are the milestones we're going to meet on the way there. If you're talking to kind of long investors like that who are used to investing in this space, I think that's going to resonate really well. And you're like, hey, we're budgeting our spend to hit these milestones with this money. That's going to build a lot of confidence.
Awesome. Anybody else want to come off mute and ask a question of Josh while you've got him?
So yeah, this is Kevin Irwin. So a quick question on the revenue forecast. Is the purpose to discuss the sources of revenue with the audience that you're pitching to, or is it to and spark debate there? Is it to put a commitment in? And then a second question is, what does the firm do? So you finished your pitch, they're going back to office, whatever. What do they do with the numbers from there?
Great questions. Just kind of going in order. I like, in the context of pitching to investors, I don't think we're trying to create debate over like what is the best way to monetize your idea or things like that. I would approach it like, hey, investors, this is the way I've decided to monetize my idea. This is how the business works. The idea is not really to discuss or debate that. It's just to inspire confidence and help them understand the mechanics of the business. And so if I'm pitching to the investors, I want them very much to see me as the expert in the chair, and I'm inspiring confidence in them of like, I know how this business is going to make money, right? Now to your, remind me your second question. It's like just slipping.
So after the investors leave, what do they do with it?
Nice. So their process is, there's two options here, okay? I'm going to tell you what happens in both cases. One, if your financial model is not very good, they're just going to make their own, right? And in that case, we don't have a ton of control over how you build it. The second option is if your financial model is good, it's going to clearly identify the inputs and assumptions that you're making about the situation, right? So a good financial model is going to be made up of two things. There's going to be a bunch of calculations that represent kind of the mechanics of your business. And then there's going to be inputs and assumptions, which is like you're saying, we are assuming, or we are trying to hit a conversion rate of 5% on these ads or something like that, right? That's an assumption. Your investors, if they're doing deep due diligence on your company from a financial perspective, are going to challenge these assumptions, right? They're going to say, 5%, I think you're only going to get 2%. And then they're going to make that change, and then they're going to see what happens to your business. And they're like, okay, like, so if they still only get 2%, like they're reaching profitability, 6 months later or something like that. And they're kind of going to stress test your idea. That's the general process. And if they can do that with the model you have, they will. And that's awesome. If they can't, they're just going to build their own. And if you're early stage, this is if you're like really, really early, this is less of a common practice because they're going to be investing more in the idea and the team than anything. So when they look at your financial model, it's all going to be about conveying or inspiring a lot of trust in them that you are the guy, you're the team to pull this off, and you have a plan with their money of what to do with their money, basically.
But Josh, all that sounds so complicated. Is there a tool that could help us do that?
If only. Yeah. So that is where Forecaster comes in. If I have the opportunity to pitch that. So like we founders will come to us at different stages, and we have kind of different packages. If you're looking to put a financial model together, we have our essentials package, which is it's like $500 a month, and you'll get to work with a financial analyst from the Forecaster team who's just built tons of models, and we'll work with you to build a professional financial model for sure. But great question. Love that question.
How could I get a hold of you?
That's a good question.
Any other questions from the group? You can unmute yourself and pummel Josh with another question or two.
Yeah, hit me with the hard financial questions.
This is Rod Blanchard. I'm sorry I'm not live here. But my question is, if your project has unique tax advantages or guarantees, do you include that in your initial pitch deck?
I would probably, that's a great question. I would see this as something that is kind of de-risking the investment, so to speak, and helping the money stretch a little further. So I would probably lean towards, in most cases, keeping that in the appendix, and using it like when investors ask you questions, you're like, hey, I'm glad you asked. Like, I understand that doesn't seem like we're raising enough money, but there's a reason for that, and then you can double tap into it, or things like that. Without knowing the specifics, that's a tougher one to comment on. But in general, I'd probably put it in the pitch deck and let it be a supporting detail to the main story, right? Like, no one makes money just to pay less taxes. They make money to keep the money that they're making, and we want that to come through, right? Does that help answer your question?
Well, I mean, this project, it's unique in that every dollar invested can be deducted as in the year of the investment.
Okay.
So it's not a typical capital gains structure, which most investments are. So
I see. So yes, I would say that is a feature of the investment for the investors. So that's probably I might have like a note about that on the ask slide, right? And then I would have a separate slide going into details. They ask for more details there. But I would still keep like the main thing that you want to inspire confidence in is the business, and the fact that if you get this investment, the business will work, it will go on and make money. And then this is a incentive basically for the investors to say like, oh, well, maybe I would prefer to have my money go into this investment rather than another one. But that makes more sense where you're coming from.
okay, thanks.
That's helpful, Josh. Thanks.
Yeah.
Hannah, our captain of Midday Connect, reminded me that Forecaster is one of our marketing sponsors here, or partners here at Midday Connect, has given us a discount link. So she's going to put that for Forecaster. So she's going to put that into the chat. We can also share that out via email to all the attendees, because we love Forecaster here at Midday Connect. They're awesome. Also, I put in the chat I'll put it in again, but would be interested in your take on this, Josh. Different revenue models that you described. Someone smarter than me posted about that and listed out many different revenue models that you can kind of choose from and say, oh, I fit into this bucket. So check out that link on LinkedIn and you can get that list. One last question, Josh, and then we'll wrap it up. What's the biggest and most common mistake you see in a deck around presenting financials?
Nice. I would say presenting information that's hard to defend is the number one bucket, so to speak. And I think this comes up in a lot of ways. Sometimes I think founders get carried away presenting like too much information that I'm like, that's just imaginary. And we don't really want to steer the conversation that way. And then getting a little too getting more precise than your stage needs is a big risk. I think that I see quite a bit. So like, for instance, like almost oversharing. Like I see a lot of people putting in like full forecasted financial statements of like, you know, revenue, cost of goods sold, operating expenses, net income, things like that. Too much information for the main deck for sure. Raises unnecessary questions early on. And then one of the other big ones is not taking into account the relationship between years in the financial information. So for instance, I'll highlight just a couple of things here, right? I already talked about the revenue growth rates. Like, okay, is this attractive but reasonable? Or is this very attractive and completely unreasonable? Like that doesn't help you out a lot. The other thing that you want to think about too is like, okay, if you're building your financial model and you're trying to figure out how much cash you need to raise. One of the biggest things that I see people doing is like their financial model is not well connected to their milestones that they need to hit, which is kind of a disaster because that tells me you don't truly know how much cash you need to raise to reach these milestones. So that's a little sketchy. And then making sure that your expenses grow in relation to your revenue, right? Like a company doing $1 million in revenue might have a team of 15 and an expense budget of whatever, but I guarantee you that that same company doing $50 million in revenue is going to have a much larger team and a much larger expense budget, probably more so than you initially think. So anyways, that's what I would kind of call out as some big pitfalls to watch out for.
Awesome. Josh, thanks so much for your time today in the presentation. I believe Hannah should have these slides and we can share those out with the attendees. Is that correct?
I can send them over. I don't think she has them yet, but I can send
Okay,
them.
if you don't mind, yeah, she'll disperse them to the attendees and we'll make sure that we get them your contact information as well. Really appreciate everybody coming to the Midday Connect. We're here every week, Tuesday at 11 a.m., just having experts like Josh educate us. So thanks everyone. And if you're in person or close to Kiln, we're just going to go downstairs to another one of our partners sessions, CMO Zen. They're going to do an awesome lunch and learn downstairs. So we'll see you all next week. Thank you.
Good to see everyone. Thank you guys.
Thanks, Josh.
I think I registered. I want to make sure I get the slides in that link
Yeah.
and that list of revenue.